Thank you so much for joining us here on a Wednesday. I'm Marlon Bowling with you, and we're going to take a look at your ag commodity trade coming up in just a moment. We have some new information that has just come out on the wire, and it is our new ethanol production. I just wanted to pass this along while I had a moment here. We'll take a closer look. So last week, the ethanol production in the U.S. averaged out to be 1.057 million barrels per day. How about that? That was up from last week's total of 1.044. So that would be roughly 13,000 barrels a day more than what we had a week ago. Now the 4-week average has increased a little bit. It's up to 1.046 million barrels per day. Ethanol stocks bumped up a little bit as well. They were up another couple 100,000 barrels at 23.1 million. And the imports, once again, stayed at a big fat zero. So that continues that string of no ethanol imports coming into the country. Well, let's find out what's going on the grain trade right now and bring in Todd Bubba Horwitz of BubbaTrading.com in Chicago. There he is. Man, sounds kind of noisy behind you today there, Todd. What's going on?
Well, you know, Gary Cohn resigns and the markets get tanked, and of course they've already rallied all the way back. So here you have it. Grains are pretty neutral. You know, not a lot going on, but obviously the excitement and the fear from when Gary Cohn resigned is the financial guy for the president. That caused a little bit of fear overnight, and now we're just back to normal and back to normal trade.
All right. So if memory serves me, I think you're closest to the euro-dollar pit. Is that correct, or in that neighborhood there?
Yeah, the euro-dollar's over there, and the S&P's over there, and here I am.
All right. So lots of noisy activity today. So very jumpy market action. Not so in the grains today. Do you think their trade is just kind of biding its time here ahead of the government report tomorrow?
You know, I think really the markets are waiting to go a little bit lower here. I think that, again, I'm very bullish to space longer term, but here we've had such a nice rally and we've gone up so far that I think that you can just see they're kind of on edge and they want to sell off, and I think they're trying to wait for this report, but I wouldn't be surprised if we see some pretty good selling coming in later today and tomorrow into the report, because I think there'll be a little bit of fear at how much they've actually rallied, because basically, you know, we're up about 10% in corn and wheat and soybeans across the board. We rallied about 10%, so that's a pretty big move.
All right, on the corn chart, we'll take a look at that in a second. It has had a long, almost a straight line move up here for most of the year. On the corn prices right now, let's go ahead and take a look in Chicago, see what the corn futures are doing. They're not doing much of anything at all. May now unchanged at 388 1/4. We have December new crop down a half at 406, so kind of quiet. On that chart that I was talking about, on the corn chart, you can tell that if you look back all the way to, well, I guess almost the end of last year, that has been a significant climb. And Todd, from what I understand, the farmers have really been consistently kind of rewarding that market as it works its way higher with doing either cash sales out of the bin or doing some hedging ahead, huh?
And they should be doing it. I mean, look, we don't get these kind of moves as often. And from depression, when we were down at 340, now we've got some joy. Now, again, a lot are ignoring the opportunity to take advantage of this right now. And this is the perfect time to at least lock in some dough here and not let the markets get away from you. Now, again, I think we're going higher, and I think we're going to see, you know, 450 December corn maybe higher. But I think that you have to make sure that you protect here, and there's ways to protect without giving up the potential of a big market, because there is the outside chance that we get really a big market out of this as well. There's a lot of factors that could play into a very bullish market here.
Okay, let's take a look at soybeans right now. On the May soybeans in particular, that is basically, for all intents and purposes, our lead month here. The May contract 4.5 lower at 1070 1/4, and September down 1.5 at 1058 3/4. On the wheat trade in Chicago, we now have the May contract there trading at 503 1/4. That is down 3 3/4 now. We have July new crop down 3 1/4 at 518. Meanwhile, in the Kansas City market, this market has been chopping around on both sides of unchanged here. We have the May now down 1 3/4 at 539 3/4, and July down 2 at 555 3/4. Minneapolis wheat has the May contract now 4.5 lower at 624.5. Cotton market has really firmed up this morning though, and we have the May cotton now 69 higher at 83.12. December up 10. All right, Todd, we'll come back in a moment and take a look at our cattle and hog market activity as it stands right now, direct from Chicago, right after this. We are joined once again by Todd Bubba Horwitz of BubbaTrading.com in Chicago, and he's amidst kind of a noisy area there on the trading floor today. A lot of activity going on. Let's talk about the livestock markets here, and on the live cattle trade today, once again we had kind of a quiet open. It tried to firm up, then it sold off, and now it's firming up again. Here we have April live cattle now 28 higher. Check that, now 26 higher at 123.08, and we have June 27 higher at 115.05. It's not a runaway train, but it is closer to the high of the day than the low. And if you look at the feeder cattle market right now, you have the nearby March 15 higher at 144.45. It's about 80 cents off our earlier low of the morning and only one tick from our high right now. April back to unchanged at 146.12 on the day, just one tick from its high of the day. Most of the contracts are anywhere from 15 to 35 higher there. Kind of quiet trade. Are you surprised by that?
No, I think this is great bottoming action, Marlon. You know, we were looking for 122 in the fats and 144 in the March feeders. We've achieved those levels. Now I look for them to go higher, but this is like they're starting to make a bottom and build a nice base. So I'm looking for much higher prices, and I'm not at all concerned. In fact, I would buy more if we came back down to those prices again. I would step in and buy more because I think that we're going to see, when you see this type of bottoming action, we're going to start to see a big move up. This is the same kind of action we had in the grain markets a few months ago before they took off the upside. And I expect the same thing here in the cattle markets.
All right, explain something if you could. I heard earlier this morning where the large commodity funds have really racked up a lot of net long positions on the cattle side, even though it's been selling off here somewhat lately. Explain that motivation behind all that.
Well, I don't know that they really have. That might be more of a rumor than fact. That may be something going on because from my knowledge and from what I've looked at, they're still kind of short here, and they're still trying to step on the markets here. So there may be some funds long, some short, but I think the net position is short, which even gives me more impetus for the markets to go higher because I think they're going to get trapped. This is another situation of when you try to push markets down and they only go to a certain point, they're going to spring back, and I think this is what we're looking at now, and I think that will be the start of the rally. Very similar again to grain. I don't want to compare the two, but the chart patterns are setting up exactly the same way, and that's what I would look for from this action here.
On the lean hog trade, let's look at our current prices in Chicago right now. And going to the futures board, we have the nearby April down 90 now at 67.30. And May losing another $1.25 today. We're at $73. We have June down 88 at 79.07. So with the nearby April in that $67 range, do you consider it a buy now, or do you want to wait for maybe a better chance to buy? Or are you selling?
Well, no, I'm not selling. Let's just say I bought at 70, I bought at 68, and I'll buy more at 67. I think that we're very near or on the lows, so I think we're going higher from here. But again, I'm a little bit underwater myself, and of course, fortunately, I have a snorkel, so I can breathe underwater. But it's kind of an interesting market, but I do think that it's going to turn around. I do think it's found somewhere near the bottom if the bottoms are not already in.
So I saw where yesterday the cash hog trade on the plant-delivered hogs were higher across the board. Do you think that'll be enough to kind of put a layer of support under this futures trade for a while?
I think there is some support there anyways, Marlon. You know, each time we've come down to this level, we've had a nice bounce. Now, you know, we really got turned around, you know, when the Feb came off and we got to the Feb April. And, you know, if you remember, they separated. So I think the same thing's going to happen when we go to April, May. And I think that's going to flip. And I think it's only a matter of days before we start to turn around, and we'll see how it works out. But I do believe that this is the right time to be stepping in and being a buyer.
Thought-provoking discussion with Todd Bubba Horwitz of BubbaTrading.com in Chicago. Thanks for the time. Talk to you
Thanks,
again.
Marlon. Have a great day.
You bet. Todd Bubba Horwitz. All right, there you have it. The latest from Chicago there, where it sounds like it's kind of chaotic in the background.
Absolutely. We'll have to keep tracking that, what's going on in the financials as well as the commodities.
It's all tied together.
Absolutely. Thank you, Markets Editor Marlon Bowling.